If you're looking to get rich, one of the best strategies is to find out how the billionaires themselves got rich and to mimic their actions. And billionaire industrialist J. Paul Getty once said that his formula for success was to rise early, work late, and to strike oil. Now, if that sounds great, but you're really not all that interested in rising early or working late, but you still want to strike oil, you're going to love today's Equity Empire Chart Analysis session. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, we're going to be taking a look at the chart on crude oil futures, and we're going to see if there is an opportunity in this chart where we might be able to strike oil. The way we're going to do that is we're going to assess two things. We're going to assess, one, the direction of the trend, and are there clues as to where the big money might be stacked up, patiently waiting to buy and sell. So step one, let's assess the trend. The way we'll do that is we'll simply look for the two most recent highs and the two most recent lows. So we'll go from low to high, high to low, low to high, and we'll notice that as they move from left to right, the highs are moving lower, and as they also move from left to right, the lows are also moving lower, and that's the definition of a downtrend. So crude oil futures are in a downtrend, and when we're in a downtrend, we'll simply be looking for resistance levels for bounce trades. So if price can rise up to one of those resistance levels, we'll expect it to be rejected once again. So let's go look for resistance levels. There is a resistance level right here. I'm going to change the time frame for a little quicker trade. There is a resistance level right here in the 61.56 to 61.79 price range. There's another resistance level above there in the 62.01 to 62.23 price range. And another resistance level. There's two up here that I'm just going to simply combine these two and call them one level in the 62.66 to 63.06 price range. So three potential resistance levels to consider for short trades. Now let's go see if there's a clue where there might be some technical support. And yes, there is a technical support level right down here in the 60.10 to 59.46 price range. So that has provided support. We bounced off that level once, twice, close, three times, close again, four times. We bounced off that level four times, but as you'll notice, each of these subsequent touches to that level have gone a little bit deeper into the level, and that's a clue that the sellers are starting to wear away at the buyers. So the sellers are showing slightly more strength than the buyers are. You'll also notice that the peaks, the highs have started to roll over too. So the highs were heading higher. Now we got the lows, we got the highs heading lower. So this is looking a bit toppy here. So still kind of sideways, but starting to favor the sellers. So if the sellers are showing greater strength, let's be more inclined to enter our position in a resistance level. So the way we would construct our trade was we would place a sell limit order in the 61.56 price range, have a protective stop just above 61.79, let's call it 61.85, and then we'll drag our target all the way in front of our support level, just a few cents ahead of our support level. So this trade right here has a reward to risk ratio of 4.9 to 1, which is a very favorable reward to risk ratio. Take a little bit of risk with the potential for a much greater reward. So crude oil futures, here's this technical specifications. For every penny move in crude oil futures, that's a $10 price move, okay? So this particular trade setup, we have 29 cents of price range between our entry and protective stop. That means there's $290 worth of risk in that trade. And then if the trade does end up working, and the way it would work would be something like this. Ideally, price would work its way up to the resistance level, bounce off that level, and work its way lower until we get back down to support. Okay, that reward potential would be, once again, for $290 worth of risk, you could potentially make a little over $1,450. So that is a very favorable reward to risk ratio in a not the most powerful downtrend, but there are little tiny clues that the sellers might be starting to overwhelm the buyers. So that would be the ideal trade setup for crude oil futures now, given the conditions of the short to intermediate term trend and the support and resistance levels we've identified. So let's wrap up today's session, folks. Hope you enjoyed the session. I'll be back each day this week with more technical analysis. In the meantime, wishing you the best of luck in your trading and investing, and we'll see you soon.